Hello everyone, here we go again. Today we have our 20th set of paper for LCCI Level 3 Financial Accounting. Today we will have our paper for January year 2018. Okay, again 100 marks, 5 compulsory questions. Let's go. Okay, first question we have Simon provided the following information. We have some opening balances, okay, and then some information for the year, purchases, returns, sales, and then carriage in, and then some expenses, drawings, okay, some other things as well, okay, bank loan and some other stuff. Okay, see what we have to do. Prepare a statement of profit or loss, okay, and then some other questions. Okay, well, first question, very strange. Okay, so I can say it is related to sole trader or single entry. Okay, so let's just keep it if it is related to statement of profit and loss. And anyway, let us say that it is for sole trader, okay, or single entry. Okay, very similar. So straight up to the start, we have a statement of profit and loss. Okay, so let's drill into the information given. Okay, opening balances given to us, and then inventory, other receivables for general expenses, opening non-current assets balances, and then for the year we have discount received, purchases, returns in is related to sales. Okay, so this 5750 here. And then carriage in related to purchases, 1825. Drawings, okay, drawings is not needed in the statement of profit and loss. General expenses, we have to deal with opening, trade, other receivables, so add 250. Purchases, okay, we have credit transactions for purchases, and then this is the cash purchases, okay, 6450. Wages and salary. Okay, let us see what else is given. On the 1st of October, bank loan 20,000 was received, 8%. So October, November, December, 3 months interest accrued. We have 400 interest during the year. Let me calculate for one more time. Okay, 3 months, right? Yes. During the year, fixtures and fitting costing 3500 with a carrying value was sold for 1540. Okay, so 3500 and then carrying value 2800 sold for 1540. Okay, 1540. The carrying value, we have 1260 as the disposal loss. Okay, and the accumulated depreciation of the disposed asset would be 700. Okay, depreciation is charged 10% per annum straight line. Full year depreciation is charged in the year of acquisition, none in the year of disposal. Okay, so let us go back. 3,500 cost. Okay, 10% straight line. So we go here. 3500. We have 10%, right? Okay, so depreciation 2150. Okay, there are no purchases of non-current assets of fixtures and fittings. Okay. All sales were on credit. Simon took goods 2375 for personal use. So 2375 here. Okay, and then balances. Okay, closing balance 1350 inventory, and also other payables for wages and salary 750. 750, so add 750. Closing balance of allowance for doubtful debt 1350, so there is a decrease of 225. Okay, so we have finished, okay, with all our stuff. So I will calculate purchases. No, we can deal with it directly. Returns in, okay. So 295,675. Okay, we are going to calculate sales. 295,675 minus 5750. We have 289,925 for sales. Okay, so let us put in the information first. The space for working, we don't need it. Okay, how many marks do we have? 15 marks for this statement of profit or loss. Two lines, enough? I think so. Revenue 289,925. Okay, and then less cost of sales. For cost of sales, we have opening inventory, add purchases. Purchases, we have cash purchases and credit purchases. Okay, and then add carriage in, less drawings of goods, okay, less closing inventory. I guess that's all. Okay, so let us take a look at the information. Opening inventory 28950, closing inventory 33750. Opening inventory 28950, closing 33750. Okay, purchases. Purchases, we have 181950 and then 6450 as the cash purchases. 188400. Okay, carriage in 1825. The drawings 2275. 1825 2375. 1825. I forgot. 1825 2375. 2375, and then the purchases with the credit and cash purchases 188400. Okay, so we have 183050, and then 106875 for gross profit. Expenses. Okay, we have a lot of expenses. Okay, depreciation, and then disposal loss, Do we have other income? Yes, let me put other income first for a reduction and reduction in allowance for doubtful debt. Okay, other income. And then less expenses. Okay, depreciation, disposal loss. We have interest expense. What else? We have general expenses, and also wages and salaries. Okay, let's see if we have omitted any of it. Okay, so let's assume that it is a net profit first. Okay, so let us go to the expenses part. Income first. 225 income. Depreciation 2150. Disposal loss 1260. Okay, so income 225. Depreciation 2150. And then 1260 disposal loss. Interest, I remember, is 400. Okay, so general expenses, wages and salaries. 19250, 19500 for general expenses after adjustment. Okay, and then wages and salary plus 750, 25100. Okay, so last two items. Wages and salaries 25100, 19500 for general expenses. Okay, 48410. Let me calculate one more time. 2150 because 3535. Oops, sorry. Here it is 58410. Let me calculate. Yes. Plus 225 minus 106. We still have one more item. Discount received. I remember, yes. 1050. Other income. Okay, so we have 225 here. 1050 discount received. Okay. 1275. 106. 49740. Okay. So 15 marks for this statement of profit or loss. Okay, next. State one purpose of financial accounting. Okay, financial accounting is for the preparation of those important compulsory financial statements Okay, so it is to calculate the profit or loss. Okay, for statement of profit and loss. Okay, show the financial status, financial position of the business. Okay, you can also say assess the performance, overall performance of the business. Okay, so you just think of what are the use of those financial statements. Okay, because for financial accounting, it is for the preparation of the financial statements. State 2 advantages of being a business in a sole trader. Okay, this again quite simple. Okay, full control. Okay, flexibility. Okay, we can have all profits. State one reason why customers may be interested in the financial statement of a business. Okay, so this is stakeholders. Okay, your customer are interested because they want to assess the continuity of the business. Okay, to see if there will be stable supply of goods. Okay, so question 1 finished. Let us move on to question 2. Question 2, okay, you have these 4 items, okay, and then some explanation questions, and then the extended trial balance. Okay, so let's see. State 2 purposes of preparing a trial balance. Okay, always the same questions. Okay, so to ensure or locate error, ensure the accuracy of your accounts. Okay, and then assist the preparation of financial statements. Calculate inventory as at year end, and then calculate the change in allowance for irrecoverable debt, for doubtful debts. Okay, so let's see. The owner, Regina, provided the following information in addition to the extended trial balance given. The following transactions have not yet been accounted for. Closing inventory was valued at 65450, which did not include. Okay, so anything should be added, anything that we have in these 2 items should be added to the value. So the first product, quantity, cost, selling price, 5.8 after repairs cost of 0.5. So net realizable value would be 8. Okay, which is higher than the cost price. So this 250 multiplied by 7.5, okay, plus 1875. The second product, cost price 15. Each unit can be sold for 16 after repairs cost of 1.5. That is 14.5 NRV. So this should be chosen. 14.5, 400, okay, which would be 5800. 65450, 1875, 5800. Okay, so calculate the inventory. 65450 plus 1875 plus 5800. Okay, which would be equal to 73125. Okay, so 73125 here. Statement of financial position, debit, credit for profit or loss. Okay, 73125. Okay, next item. Irrecoverable debt, 3,000 were to be written off, and allowance of 5% was to be maintained. Okay, 3,000 and 5%. Okay, let us go to the extended trial balance. Irrecoverable debt, 3,000. Okay, so we go to trade receivables minus 3,000, and then it goes into the irrecoverable debt. Okay, so after deducting by 3,000, we have 52,000 for trade receivables. 5%, that will be 2,600. Okay, it is 1,950 in the opening balance credit. Okay, so our entry is to further credit by 650 for the allowance for double debt, and the adjustment is 650 debit. Okay, so 650, go back to here, calculate the change. Okay, 650 decrease. Okay, last item we have discount. Discount allowed 230 was recorded as a credit entry in the discount allowed account. 230 discount allowed should be debited to the discount allowed, but then it is credited to the same account. Okay, so 230. So we have to double 230, 460 here. 460. Okay, so you can see we cancel this suspense account balance. Okay, so now it is done. We post it to the statement of profit or loss. Okay, 1950, so it will, okay, so allowance for double debt, not there. 2875, 3335. Okay, next, suspense. Okay, not there. Trade payables, trade receivables, no. Okay, 650, no. Closing inventory, 73125, and then irrecoverable debt. Okay, so that's all 4 figures for the statement of profit or loss columns. Okay, let me erase these. Okay, 11 marks for this part. Okay, so let's continue. Explain, referring to an appropriate accounting concept. One reason why it is necessary for the owner to adjust the items in the extended trial balance. Okay, adjusting the items. Okay, there are many things that we have adjusted. I would say we have two main things that we have done. Okay, one is the adjustment of inventory. Okay, the second one is the irrecoverable debt and the allowance for double debt. Okay, so I would mention prudence. Okay, because there's no accrual and prepayment here. Okay, if not, I will just simply mention accrual concept for the adjustment for accruals and prepayments. Okay, but then it's not there. Okay, so prudence concept. Okay, for the adjustment of irrecoverable debt. Okay, we know the trade receivable is not able to pay. Okay, that's why we have to recognize irrecoverable debt immediately. Okay, so question 2 done. Let us move on to question 3. Question 3 is partnership. Andy, Betty, and Charlie were in a partnership sharing profit and losses in a ratio of 4 to 3 to 3. Okay, this is opening balance 1st of November year 2016. Current account, capital account, current account given to you. Okay, for Charlie, there is a debit current account balance negative. On the 31st of October, year 2017, that is 1 year later, Charlie retired from the partnership. Andy and Betty continue in the partnership, sharing profit and losses in the ratio of 3 to 2. Originally 4 to 3 to 3, it is 3 to 2 now. Goodwill was valued at $75,000 and will not be maintained in the books. Charlie's share of losses on revaluation. Okay, Charlie's share of losses in revaluation 12400. Okay, so if Charlie's share is 12400, that would be what? 12400, 12400. 1, 2, 3, 2, 3. Okay. 1, 2, 4. Okay. Monies due to Charlie were settled by a 12% loan, $50,000 with the balance being paid by check. The profit for the year was $58,000. Explain one reason why partnership maintains both capital accounts and current accounts. Okay, so this is called a fixed capital account arrangement or system. Okay, because we do not move or change capital account because of this registered capital, okay, or to restrict amount of capital contributed, okay, not more, not less, okay, something like that. Okay, so everything that happens from operations will go into the current account. Calculate the amount of goodwill due to Charlie. Okay, so we have 75,000. Okay, and then Charlie will receive 3/10. Okay, that will be 22500. Calculate Charlie's current account balance. Okay, so current account. Okay, there is no drawings mentioned. Okay, so 4,500 and then 58,000 multiplied by 3/10. Okay, no other forms of appropriation. Okay, that would give you 12900. Okay, next we have the capital account of Charlie. Okay, the year start, year 2016, 1st of November, balance Opening balance being 75,000. Okay, 12400 for the revaluation loss. Okay, revaluation loss. Okay, so we have here 75000. Okay, and then year 2017, 31st of October. Loss on revaluation being 12400. Okay, we have goodwill 22500, right? 75,000 multiplied by this one, yes. Okay, and also we have the current account. Just now it is 12900. Okay. So last we have a 12% loan from Charlie. Okay, and we have the check. Okay, so what is the amount of the loan? The loan is 50,000. 50,000. So let's see how much should be given. Okay, the balance is, sorry for letting it jumping here and there. Okay, 48,000 should be paid by check. Charlie is considering investing money in another business. Explain one reason used to measure profitability. Okay, so maybe ROCE, okay, or any other. Okay, so this is, okay, it measures the overall profitability of a business on the funding long-term funding employed. Okay, or if you want to applies to this case, okay, it measures the potential return for the money invested by Charlie. Okay, so this one finished. Andy and Betty decided to convert their partnership into a limited company. State two differences between a private limited company and a public limited company. Okay, so private, public. Okay, so for private and public, okay, first of all, shares are not publicly traded. Okay, shares are publicly traded or freely traded in stock exchange. Okay, so private company do not have minimum share capital requirement. They have minimum share capital requirement. Okay, explain one advantage of forming a private limited company compared to a partnership other than limited liability. Okay, we cannot mention limited liability, so what are the advantage? Okay, so have assets to more funds by inviting shareholders to invest. Okay, I can also say one of the advantage is for the separation of ownership and operation. Okay, because you usually you may hire someone that is more experienced or more effective in the management of the business. Okay, while you as the investor, you only you may focus on uh, strategic decisions, okay, higher decisions, okay, but not just invest all your time in the daily operations of the business. Okay, I can say this is also one of the advantage. Okay, so 18 marks, question 3 finish. Okay, we'll have a break, but before that, let us drill into the remaining 2 questions and have a glance of what it is related to. Okay, so we have 2 balances. Of course, this is statement of cash flows, plant and equipment account, and the depreciation account, and then reconciliation and statement of cash flows. Okay, good. All calculations, 21 marks. And then we have sole trader. Okay, some accounting ratios. Okay, this is, yes, calculation of different things. Okay, and then statement of financial position, and then some evaluations. Okay, is it 2 evaluation questions? Okay, so let's take a break. Let us continue. Question 4, statement of finance, statement of cash flows. So we have this company provided the following extracts. Okay, we have to deal with the plant and equipment cost account and its accumulated depreciation account. So let's see what is given to us. Debentures. Okay, a reduction of debentures, 150,000 financing, and then also a new debentures issued financing. Okay, bank, no cash. Okay, so from 13550 to 10,000, so we have an increase of 23550. Okay, an overall increase in bank. Inventory increase of 7850. Let me check. Yes. Okay, trade receivables reduction of 2,500. Trade payables reduction of 1050. Okay, operating negative, operating positive, operating negative. Okay, so next, okay, we go to plant and equipment cost and its accumulated depreciation. Okay, let me use purple. On 30th November, okay, what is our year end? Our year end is 31st December year 2018, 17. 30th November, equipment costing 35,000 with accumulated depreciation 2750, sold for 30,000. No other disposals during the year. Full year depreciation is charged in the year of acquisition, none in the year of disposal. Yes, okay, with this, okay, we will calculate the 4 items related to non-current asset. Okay, so cost 35,000, accumulated depreciation, wow, so little. Okay, this is a new equipment sold. Okay, so 3500, 2750, 2750. Okay, so 32250. Okay, sold for 30,000. So it is 2250. Disposal loss. Disposal loss, we have operating activities positive, and also investing activities positive for the proceeds. Okay, so this minus 30,000 minus 2750. Okay, do we have a purchase? 560 minus 30, and then 787 we have plus 257000. Is it? Let me check again. 560 minus 30,000 minus 787,000, 257. 35 here. Okay. Minus 35 minus 787, 262000. Let me check again. Yes. Okay, accumulated depreciation minus 2750. 2750, and then we have 106,000. 51250. Okay, so this is investing negative for the purchase of new plant and equipment. okay, and depreciation operating positive. Okay, so here we finish the non-current assets part. Okay, on 20th December, a bonus issue, 100,000 ordinary shares were made. Okay, so $1 each. That means add 100,000. Okay, minus 50 here, minus 50 here. Profit for the year at 138,425, and then dividend 80,000. Let us check if it is correct. 64200 minus 50,000 plus 138,425 minus 80,000, 72625. Yes, correct. Okay, so keep in mind that it is also possible for us to be asked to calculate the dividend by ourselves or the profit by ourselves. Okay, because we have been given the opening and closing balance of retained earnings. Okay, we have to know how to do it. Okay, so profit will go to the operating part of operating activities. Okay, and then financing negative for the dividends paid. Okay, so now we finish. Let us move on to the two accounts. Okay, 560 35,262. Okay, so let's draw the two accounts. Okay, plant and equipment, debit side, accumulated depreciation, credit side. Okay, the year start, year 2017, 1st of January, the balance being 560,000. Okay, we have on the, when is the date of the sales? 30th November. Okay, so 30th November, we have the disposal account, 35,000. Okay, and then 262 for the purchases, bank. Okay, it happens on the last day because we are not given the exact date. Okay, is it 787? Let us check. 560 minus 35 plus 262. Yes, 787 for the balance. This is 1st of January, year 2018. Okay, so finish with the plant and equipment cost account, and then we go to the accumulated depreciation. Year 2017 again. 1st of January, we have the opening balance. Okay, and then 30th November, disposal. And then last day of the year, we have depreciation of plant and equipment. And then closing balance. Okay, 57500 2750, and then 51250. 51250. Okay, 57500 2750. Okay, so 106000. Let's check again. Yes, 101. Where is it? 106. Yes, correct. Okay, the two accounts done. let us move on to the reconciliation of the profit with the cash flows from operating activities. Okay, let me use just one column. Profit for the year. Okay, add depreciation, add disposal loss. Okay, and then we have less increase in inventory and decrease in trade receivables. I forgot whether we have a decrease or increase in the payables part. Okay, let us check later. Okay, so let's go back. Profit 138,425. Depreciation 51250, and then loss 2250. 2250. 2250. Profit 138,425. 51250. Okay, the working capital, let's see. 87650. Okay, go for the green figures. For inventory, trade receivables 2500 decrease, and then 1050 decrease. 1050 decrease. Decrease, then we have less. Decrease, less. Yes. Okay, so inventory 7850, and then 2500. Okay, 138,425. We have 185. Okay, here 1025. 1025. 25. Okay, again 138,425. 185,550. Let me confirm. What happened? Yes. Okay, so this is net cash from okay, so next one, statement of cash flows. Okay, space for working, and then we have this statement of cash flows. $185,550 net cash from operating activities. Okay, next we have cash flows from investing activities. Okay, we just have two items. Add proceeds from sale of equipment. I remember this 30,000. Okay, let us check later. And then less purchase of new equipment, plant and equipment. 262. Let us check. Okay, yes. Okay, and 262, yes. That is 232000 negative. Net cash used in okay, next part we have cash flows from financing. And increase in debentures or issue of debentures. We also have repayment of debentures. We have dividend. We do not have any receipt from share issue. Okay, so let's see how much. Dividend repaid 150. Dividend issued 300. Okay, and then debentures. Okay, the first two items, and then dividend paid 80. Okay, increase 300. Okay, repayment 150, and then 80 for the dividend paid. Okay, so net cash from financing activities. Okay, 300 minus 150 minus 80, we have 70. Okay, and then the three added together. We have 23550. Okay, net increase in cash and cash equivalent. Okay, and then cash equivalent. Okay, the last two items, we have 13550 and 10,000 for cash. Okay, 13550 negative and then 10,000. Okay, let me confirm. Okay, yes. Okay, so we finish. How many marks? 7 marks for this statement. Question 4 done. 21 marks. Let us move on to question 5. Question 5 is sole trader. So let's see. we have to calculate trade receivables and calculate the depreciation charge, and then statement of financial position. Okay, year end 31st December, year 2017. Okay, opening balances given to you. Wow, this okay, is a very popular guy in our papers. Okay, I have seen him for more than 3 times. Okay, so provided the following: cash at bank, this is opening. Okay, inventory, property, plant and equipment, trade payables, trade receivables. During the year, total sales, equipment costing 35,000 purchased. Okay, so at 35,000. Took some cash for personal use but has no record of this. Okay, good. Drawings. Okay, we do not know how much. Depreciation is charged at 20%, reducing balance method on all non-current assets. Full year depreciation charged in the year of acquisition, none in the year of disposal. Okay, so there is no more movement of of property, plant and equipment, so we can calculate the amount of depreciation. Okay, so 35,000 plus the opening 350,000. Okay. Okay, and then accumulated depreciation 110. Okay, that will give you 275. 20%, we have 55,000. Okay, 20% per annum, reducing balance. So it gives you the answer for part A2, part B, 55,000. Okay, now let's go back. Ratios: 5% profit for the year to revenue. Okay, good. So we have total sales 690. Total sales 690, and then 5%. That means profit is equal to 34500. Okay, that is profit for the year. We have current ratio 1.5. Trade receivables collection period 30 days. Payables payment period 54 days, and then 360 days assumption. Well, okay, that is, we can calculate the amount of trade receivables. Okay, total sales 690, 30 days. Okay, let us go here. Trade receivables over 690,000 multiplied by 360, 30 days. Okay, so trade receivables will be equal to 57500. Okay. We have cash at bank 11450. Okay. Trade payables given to you. Okay, that means we will calculate inventory by applying the ratio of 1.5 for current ratio. Okay, we have trade payables payment period 54 days. Trade payables, we can calculate purchases. Okay, but then it seems we don't need purchases, I think. Okay, so anyway, let us go to the statement of financial position part. Okay, drawings is our last item of concern, of calculation. Okay, 2 columns enough? Yes, I think so. Okay, but if you want to show, okay, maybe let's make it 3 columns, because I would like to show the cost and accumulated depreciation as well. Okay, although it is not needed, I always like to show if information is given to me. Okay, carrying value, assets, non-current assets, property, plant, and equipment. Okay. We have 385000, 165000, 22000. Okay. Next, we have current assets, inventory, add trade receivables, given to us the cash at bank, and then total. Okay, next we have equity and liabilities. It seems we don't have any non-current liabilities, so we have current only. And we have trade payables. Okay. So let us put all the things that we have so far. Trade receivables 57500, and 57500, and then we have cash at bank 11450. 57500, 11450. Okay. Next, we have trade payables 67500, and profit 34500. Okay, so trade payables 67500, profit 34500. Okay, opening equity. Okay, we'll use this cash at bank, inventory, and then this total. Okay, 26900. 269,000. Okay, so next one we will calculate. Okay, this is current liability. Okay, current assets we don't know, but then the ratio is 1.5. Okay, so 67500 minus 1.5, we have 101,250 for our total current asset. Okay, that means for inventory we have 32300. Okay, let us check 323. Okay, 323. 101,250. Yes. Okay, so next one we have total assets 220,000 plus 101,250. We have 321,250. That will give you the total 321,250. Okay, these two the same. Okay, and then with this 321,250, we can calculate total equity. Okay, here being 253,750. Okay, and with this we can calculate total drawings. Okay, that will be 49750. 49750 negative. Okay, let me check again. 269 plus 49750. Yes. Okay, so the whole thing finished. 8 marks. Okay, 2 more evaluation questions. Let's see what we are being asked. First one, okay, An and Soha evaluate which business is performing better. Okay, so we have profit for the year to revenue percentage. Soha is better. Current ratio, Soha is better. Trade receivables collection period, they are better as well, and trade payables, more or less, I would say it is okay for both. Okay, so let us deal with it one by one. So for the profit for the year, it means that we can, Soha are able to generate a higher profit from its revenue. Okay, so maybe because of an ability to sell at a higher price or get purchases for lower cost, or the efficiency in the control of expenses. Okay, anyway, they are much better, 10% versus 5% here for ARM. Okay, and then current ratio 1.7, still not reaching the ratio of 2 to 1. Okay, we do not have the asset test ratio for us to further compare. Okay, but then we see 1.7, that means they are more able to repay the liabilities from the current assets that they hold. Okay, so 20 days versus 30 days. Okay, Soha are able to collect from their trade receivables the amount of credit sales in 20 days. Okay, that is 10 days earlier than ARM. Okay, that means the liquidity will be better because we can use this amount to help us pay for any further supplies of goods. Okay, trade payables 60 days versus 54 days. Okay, they are both longer than the trade receivables collection period, which is good. Okay, that means we can collect money from our sales before we need to pay for our purchases. Okay, that is both goods. Okay, but then 60 days and 54 days, I think it is a bit long. Okay, and this will deteriorate our relationship with our suppliers. Okay, if they do not want so long the credit period. Okay, and also it is possible for us to forego any chances of getting this discount received. Okay, so I think for both businesses, okay, it is better to reduce the payment period for trade payables. Okay, conclusion, overall speaking, of course, Soha is much better than An. Okay, so next one. An offered her accountant a free holiday in return for making a false claim for expenses about safe disposal of chemical waste. Very bad. Okay, her accountant is worried that if he reports this, he will be compromising the principle of confidentiality. Discuss what An's accountant should do. Refer to the principle of professional ethics and the concept of public interest in your answer. Wow, so good. You are already given the hint of how to answer this question. Okay, so for the principle of professional ethics, okay, the first thing is integrity. Okay, if you are an accountant and you have to make a report, okay, it has to be out of honesty, based on the facts that happen. Okay, if it is not safe to dispose of those chemical waste, okay, then you should mention that in your report. Okay, but not, of course, never should you make a false claim. Okay, how about confidentiality? Okay, so this one we will pair with public interest. Okay, of course you have to observe confidentiality. Anything that you learn in the course of your work should not be told to an unauthorized third party, of course. Okay, but then if it affects adversely on public interest, okay, if the public should be able to know about these things, okay, then it is not governed by confidentiality anymore. Okay, just like if you come across with the possibility of fraud, the possibility of corruption, okay, you should call the police, you should call any authority, you should be the whistleblower, okay, because of the public interest. Okay, so if that adversely affect public interest, then you have the responsibility to voice out. Okay, and you are not governed by this confidentiality thing. Okay, so the final decision, of course, you should voice out, you should report, you should not make this false claim. Okay, so 5 marks, and this 22 marks for the whole question 5 is done. So this is our 20th set of paper, 2/3 done, and we will go on still tomorrow for the last 1/3 of our marathon. Okay, 10 more sets of paper to go, and we have half a month. Okay, so let us work hard, everyone, on this practices. Okay, so tomorrow we will start papers for year 2017. Okay, and we'll start in December year 2017. Okay, so see you. Goodbye.